Joining me now here on set, great fun, John Carney, editor for Breitbart News, Finance and Economics, and author of the Breitbart Business Digest, and my great pal David Bahnsen, managing partner of the Bahnsen Group. Gentlemen, welcome. David Bahnsen, start with you. What's your take on this, and how are we going to get out of this?
Well, you said that they could raise rates 300 more basis points, or they could go to the supply side idea. So if it's A or B, I take B.
Yes.
And I agree with you, they're not going to do it. But B is what we need.
Yes. 300
more basis points will hurt the middle class people more that are already hurting now from higher prices. It will largely unaffect the people that are in the upper income margins. Basically, Larry, this is a supply-side driven inflation phenomena, and it has supply-side resolution if they would go there. Lower tax rates, energy revolution, these things can be done. Deregulation, no one's talking about that. It would be an instant solution. But the problem is ideological. They don't believe in it.
Yeah, I mean, I mentioned deregulation. Just as a follow-up, the reason I'm talking about 100 is I think without help from the supply side, you're going to have to bring the Fed funds target rate above the inflation rate. And my point about the broader measures, I really look at the Cleveland Fed. They take the highs off and the lows off. I think you're looking at, let's say, a 6.5% to 7% inflation rate. So even if the Fed funds rate gets to 4%, which is, I guess, baked into the market by year end, you're still way short of a positive real rate. I don't see how to get it. I mean, I love John Carney. I mean, you know, Art Laffer was on the show last night talking about how Reagan slashed tax rates. Problem was, we postponed and deferred the date they went into place, so we suffered a pretty bad recession, right, as Volcker pulled money out of the economy. But now we have no such thing. We don't even have lower tax rates to postpone, for heaven's sakes. And one other point I want to make, I know you're going to talk about food prices, very, very important. I think we should be establishing workfare. We should get these folks back to work. There's a tremendous imbalance in the labor market, and that's the only way that'll get healed. Anyway, what's your take? And I know on the radio, you and I were talking about the significance of food prices, which food prices went up, let's see, 0.8%. So they're up 12.2% annually over the past 3 months, 11.4% over the past 12 months. When the 3-month is above the 12-month, you got a bad trend.
It is very bad. Food inflation has been rising. And yes, there is a lot of supply side problems that are causing inflation elsewhere, but that doesn't explain food inflation. Yeah. What's happening is we really ramped up demand. They were able to crush down the price of gasoline, but that is just like pressing on a waterbed. You press down on one side and it comes up on the other, and that's what we're seeing in food. It is all of that demand is coming, the money that people aren't spending on gasoline. They're not spending at the pump, they're spending at the grocery store. That's pushing up the prices, and there's no end to this. When you look, you were just talking about the Cleveland Fed numbers. Mm-hmm. Those are a very good predictor of where inflation is going in the future. And when you look at those, they got worse. The trimmed mean, the median inflation. I really like median inflation because it's a simple concept. Trim mean sounds like we're all going to get
median inflation means right smack in the middle of the whole index, right? 50% point.
Right. Everything that's right in the middle, half the things went higher, half the things went lower. Yeah. It is a very good predictor for where inflation is going. That got much hotter. It's actually at the hottest it has ever been in records that go back to 1983. They don't know.
You think food prices actually lead the index?
I do. I think food prices are one of the best places to look. The Fed likes to look at core inflation based on an outdated concept that food prices jump around a lot. They actually don't. Overall, food prices are relatively stable. So what we should do is actually think of core plus food. I call it food core inflation. And that is up a lot. Nobody else looks at it. I'm glad you like to bring it up because that, to me, is my core inflation. It tells us where inflation is going. It also tells us how it's hitting American families because that is a huge part of middle-class expenditures every month. And people see it every week when they go to the grocery store.
David Bahnsen, the other thing that's so painful here for working folks is real wages have fallen. Yep. I think I said 17 consecutive months. So a lot of folks are working harder, and more folks are working, coming back to work from COVID, but what they're getting by is less. Yep. And that has to be a killer, an absolute killer. It's demoralizing. Do you know what I mean? I mean, you're sitting around saying, my God, I'm giving it my best shot, and I can't even get baby formula on the shelves.
Well, and that's with labor having a lot of leverage because it's 3.5% unemployment. Imagine if they get over 5% unemployment. This is the problem I have that our supply side friends agree with me on. I don't like the idea of saying the jobs are inflationary.
No,
I don't
right.
like the idea of saying that, oh, we got to get a lot of people not working and that'll solve for inflation by crushing demand. We have got to have a healthier, more organic way of promoting the production of goods and services.
More work incentives would
Yes.
bring inflation down. Is that fair?
That's right.
I mean,
and
really.
And getting the labor participation force up, but work incentives, workfare, that's a huge part of how
More
we do it.
investment incentives. Now, they're raising taxes on investment. That was part of the Inflation Reduction Act.
Yeah.
More investment incentives through lower rates would bring down
But see,
inflation.
it's worth saying to you, because you were so instrumental in this, when we talk about the latest bill that's raising investment taxes, think about Build Back Better. What if Manchin had not held the line there? What if they put that in? What would we be talking about right now? It's unfathomable if investment taxes had gone up that much, that would have crushed incentives for investment.
Well, you know my story. I fell in love with him, and then he broke my heart.
Well, I know.
And now the far left progressives in the House are going to double cross him because
Yes.
he's not going to get his permit, and he's probably not going to get his pipeline either. John Carney, stocks fell almost 1,300 points. Interest rates are now rising higher. They're galloping higher. They're up 100 basis points from just a month ago. The mortgage rate back to 6.5%, which is really something. What's your take on the markets?
I think that the markets saw what the inflation numbers were today, and they said this means not just a bigger hike coming. The Fed might chicken out and do 75. I'll be disappointed. I think they're probably going to do 75. I think they should do 100, but they're looking down the road. And if you look down, into the Fed funds futures market, it tells you that a week ago, people thought the terminal rate was going to be around 4%. It's now telling you it's going to be 4.5%. So people see this number and they say, everything the Fed's done, we've had record high, the highest rate hikes we've had since 1994, and that didn't do anything. Core inflation, underlying inflation is still rising very rapidly, so the Fed is going to have to hike for longer than anybody thought.
And, look, I don't have much sympathy because Jay Powell should have acted a year ago, 15 months ago. But recently he's grown hair on his chest and he's regained his inflationary manhood. So they will be tough. But as David said, to be fair, he's not getting any help from fiscal policy. Fiscal policy is actually pro-inflationary. It's spending more and it's raising taxes,
This student
and
loan
it's
forgiveness.
regulating more, all of which depresses goods and services. So you got what? Still too much demand, still too little supply, more money chasing fewer goods. I don't know how this is going to change without major pain.
They won't stop proposing new spending either. Biden single-handedly said he's going to cut student loans by $500 billion. That's inflationary. Everybody agrees. You don't have to be a right-winger to think that. Jason Furman from the Obama administration, Harvard University, says this is inflationary. So they keep, they passed what they call the Inflationary Reduction Act, and they've already taken away all of the possible deficit reduction in that act. And then today they have the nerve to go out on the White House lawn and have a party
with
celebrating
James
their
Taylor.
law.
I know. It's just that is an insult. That is an insult to the middle class of this country that's shouldering the burden of their progressive mistakes. David Bahnsen, I would like to think, hypothetically, that the cavalry is coming and both houses are going to go GOP, so at least they might stop bad stuff, maybe even repeal some of these bills. Certainly that student loan cancellation was unconstitutional. Maybe they'd go back on that. If that were the case, would you buy the stock market on the way down?
Well, yes. I mean, we're long-term
question.
investors. We're long-term investors, so I would anyways. I love gridlock. I love gridlock for the market, and history loves gridlock for the market. I want to take the Senate. I hope we do, but I know we're taking the House, Larry. We're going to take the House. That means gridlock. So at least we stop the bleeding there. We have to focus on the right agenda going into 2024, get back all three branches of government and do some good things for the economy. Ultimately, though, the issue that the market is going to set itself up for a rally here is exactly what John was talking about with where the Fed funds rate is projected to be. There's some point at which the old Jay Powell's coming back, I promise. There's some point.
The wussy Jay Powell.
He's coming back, and credit spreads wide enough. Remember, they're doubling doubling quantitative tightening. No one's talking about that. They're
Haven't
doubling
seen it yet,
They
but
haven't seen it
that's
yet.
their
That's about to
intent.
start. So if that all of a sudden starts accelerating the extraction of liquidity, then the Fed funds rate, he cannot continue to be aggressive.
But it's
That's
tough.
my
I don't want to get too technical, but it's tough to sell mortgages because prepayments have stopped.
Oh, that's right.
I mean, it's not going to be easy to get rid of the balance sheet. John, last point.
That's right.
The big story, Jason Furman's article in the Wall Street Journal, the worst news, the worst article of 2022, was that we're going to have a 6.5% unemployment rate for the next 2 years. What's your thought on that?
I think there is a big risk. Seeing what we've seen, nothing the Fed has done so far, despite huge hikes, have done anything to affect the labor market. We're actually seeing, hundreds of thousands of jobs being added each month. You can't keep down inflation. I agree. I don't want to see a huge spike in unemployment, but there's no way to bring down inflation if you're adding 500, 300, 400,000 jobs month after month. It's not going to happen.
This
Demand will keep rising.
anti-inflation stuff, whatever he does, faster, slower, it's going to go on for at least another year, maybe 2 years. I don't see how you get around
The
that.
problem is that I want to be able to disagree because I think with the right growth agenda, you can have 500,000 jobs and still have low inflation.
Sure.
We've seen it. It's just that we don't have the growth agenda.
You can have it.
You can.
With the right, I agree. Supply-side fiscal policies, free markets. Why don't we reward success instead of punishing it? Why don't we reward work instead of inflation? Punishes work.
Yes.
Right? I mean, that's 17 straight months of declining real wages. I got to get out. David Bahnsen, John Carney. Terrific stuff, gentlemen. Thank you very much.